On Monday, Donald Trump's going to do something that could send stocks lower at a time when we're sitting right near the upper channel. Right now, traders think there's no way stocks can ever go down. Look at the volatility index. The volatility index sitting at 17.49. The last day it traded, however, the VIX was actually up $1.12. We look at the fear and greed index. We are back into extreme greed. Now, is this good or is this bad? As a wise man once said, be fearful when others are greedy, be greedy when others are fearful. We even come over and look at the most recent investor sentiment survey. We had quite the jump up in bullish sentiment this week with a reading of 45. The previous reading was 35.1. And look at the bears. The bears dropped down to 33.1. Also, the neutral dropped down to 21.9 from a prior reading of 24.7. Now, the bulls do have a lot to be grateful for. We can see the last trading day of the week, every sector was in the green except for energy. It was barely down. We look at the 1 week performance, all the sectors were in the green. We look at the 1 month performance, only one sector is in the red, and that is consumer defensives. We even come over and look at the 3 month performance and notice only 3 sectors in the red. Energy, that's good for us, the consumer, good for inflation, healthcare, and real estate. Every other sector has been in the green. However, when we come over and look at what Trump is likely going to do on Monday, Trump says tariff letters to 12 countries signed going out on Monday. Now, you might not think this is such a big deal. However, on July 4th, we saw the US threaten the EU with 17% tariffs on food exports, which was another sign that, guess what? The tariff talks may not be going as good as everybody has hoped. Then we come over and we look right here at this other article from Zero Hedge. Trump sends tariff letters threatening up to 70% levies, sparking fears of delayed trade deals. Now, let's not forget, July 9th is the magical deadline unless Trump tacos out once again. Let me know in the comment section down below. Do you think Trump's going to taco out on July 9th and push the dates back? Or do you think we're going to see some volatility in the markets due to the tariff talks? Now, when we look at the letters that Trump has signed, he says some of the tariffs will be between 10 and 20%. However, there are some that could be between 60 and 70% tariffs. And we're going to see how the market actually digests this news coming up this week. Now, we also have other things to be concerned with as well. Just at a time when we thought everything was cooling off over in the Middle East, Tehran dismisses reports of renewed U.S. talks amid domestic anger. Now, this is going to be a problem, right? If indeed Israel or the U.S. go back and strike again, one, that's going to cause more uncertainty in the market at a time when the S&P 500 is overdue for a pullback. Now, if we come over here real quick and we turn on the 9-count indicator, last trading day for the SPY was actually on Thursday. And look what we have. We have an 8-count. 9 counts equal a sign of exhaustion, which can be resolved in 2 ways. The market can go sideways like we did right over here after that 9-count, or we can get a pullback in this market. Now, if we come over and look at the weekly chart real quick, let's not forget last week we had a 9-count. Then if we go ahead and we turn on the linear regression channel, notice we're right here at the upper end of the range. Also a good location to start seeing some type of pullback in this market. Now, if we look at the candle from last week, we actually closed in the upper third of the range, almost at the tippy top of the session. Now, that is a bullish sign out there for the market. Also, look at the MACD indicator. We have a very good separation of the 2 lines at a roughly a 45-degree angle on the way up, which is also another very bullish indication out here. However, as we start to drop down to the daily chart, we have an 8-count, which maybe on Monday we'll get that 9-count, but look down at the MACD indicator. We can see the MACD indicator peaked out in relation to the swing high over here. Now the market has not only went up higher, but it's went up higher, making new all-time highs. And look at the MACD indicator down here. The MACD indicator simply is not confirming those new highs at this moment. Now, if we go ahead and we look at the RSI indicator as well, we can see right here is the 70 on the daily chart. The RSI is well above the 70% level. Now, why is that important? Well, if we scroll back in history real quick, look right here. The RSI was above 70. We got a little bit of a pullback. We look over in this area right here. The market went sideways, ultimately pulled back. We saw the RSI hit 70 over here. The market pulled back. Come over here and we see the RSI did get quite high over here, about 80.57. And ultimately, the market ended up pulling back. When the RSI got above 80 over in this area, we kind of worked it off by going sideways. We got above 80 over here. We got a small little pullback. Now, I do want to draw a horizontal line across this high peak of the RSI. And let's see in relation to where we are now. Now we can see that in the past, we have been up higher. So are we going to get some type of blow off top where we see RSI even getting stretched from this point on? Now we come down, we start looking at the 4-hour chart real quick. We can clearly see that MACD divergence playing out. As the market was running up near all-time highs, the MACD indicator simply not confirming those highs. Then as we come over and look at the 30-minute chart, notice we had that large gap up on Thursday, and we've had quite a few gaps on that move on the way up. Now we did form a Pism Paul shaped profile, and I put a video out on Saturday showing you guys how to trade the P-shaped profile. Amazing deals out there. Apex Trader funding, 80% off all evaluation accounts. My Funded Futures, 50% off first-time users. Tradeify, 50% off first-time users. And 35% off reoccurring purchases after that. Use promo code Mike. If you guys want to trade with a prop firm with the best payout policy out there, Take Profit Trader, right now, 40% off all the evaluation accounts. Best yet, no activation fee. Take advantage of these offers. Use the link in the description box down below. Now, we come over and look at the ES real quick. I want to start off looking at the daily chart, and this is going to be the futures market. If we go over and we just simply turn on the 9-count indicator real quick, notice since the futures markets did trade for half a day on Friday, the S&P futures actually got the 9-count on Friday. And with Trump's letters going out on Monday, is that going to be the catalyst to actually get the markets pulling back here just a bit? Now, as we come over and look at the volume profile levels on the 4-hour chart, I want you guys to pay very close attention. Notice last week we have untested point of control. We still never hit it. Now, this week we're also above the point of control, which comes in at 6246.75. Value area high will be 6264 and a quarter. Value area low will be 6233.25. Now, with this, anytime we close outside of value, I expect the next 1 to 2 sessions, we're going to come back and test that level. Since we're dealing with a weekly profile, one session would be defined as 1 week in time. So either this coming up week or the following week, I expect at minimum, we will come back and retest that value area high. And more likely than not, we're going to come out and take out the point of control because it's 2 consecutive point of controls. There are times we'll get 3, maybe even 4 consecutive untested point of controls, but 4 is very rare in the market. If you look at where the pullback is likely going to take place, look over here on the composite profile. Where are the areas where we've had high volume in the past? Right here at a price point of about 62.35 is a high volume area, which we came down 1, 2, 3, 4 times. We had a very hard time of pushing below that level and staying below it. So if we can get below this level, that then opens the door towards this next high volume area, 61.87, and then maybe even coming down, taking out that point of control at 61.45 and a half. Now, one thing I also want to do is grab my Fibonacci retracement tool, measure from the swing low all the way up here towards the swing high. And this is something we've been talking about on the live streams. Now, if you guys don't want to miss the next time I go live, make sure you're subscribed. You have the bell notifications turned on for all. Next week, we're going to be giving away Take Profit Trader accounts live on stream. But something we were talking about is watch for the 38% retracement. That would be a minor retracement in what could still be a very bullish phase in this market. Maybe we're going to get a big blow off like we saw back in 99 to 2000 dot-com bubble burst. And in that case, we'll probably see the S&P going all the way up towards that 7,000 price point. However, in the short term, I do expect in the near future that we will come down towards that 38% retracement. Now, as we come over and start looking at the daily profiles, we have a situation where we're sandwiched between 2 consecutive untested point of controls. One down here at 62.67 and a quarter, and the other one up here about 63.24 and a quarter. Now, notice I was really surprised that come Thursday night, we didn't go up here and try to take out that point of control. Instead, the market broke lower. Now, if you look at Thursday's profile, we had what's called a Pism Paul shaped profile. And again, on Saturday, I released a video showing you guys how to trade that, where the targets would have been, where you could have taken advantage of that. So that's a video you definitely want to make sure you check out. Now you can see we've pushed down and look at where the volume was built on Friday. Now, Friday was a holiday. It was a shortened trading session, but basically we came down, we started consolidation. Is this going to be some type of bear flag pattern to go ahead and take out this point of control right down here? Now, if we look at the volume profile levels from Friday, 62.80 and a quarter will be value area low. The point of control will be 62.86 and a quarter, with value area high being 62.97.25. One thing I'll tell you is if we do open below that point of control, Then we're going to have 3 consecutive untested point of controls. And a lot of times when we get 3 untested point of controls, we take out 2 point of controls in that next session. So do we come up here, smack back down, or do we simply open up weaker and then throughout the trading session, we come all the way back up? If we're trading below value area low, I want to turn my attentions down towards that point of control. If we go below value area low and we start coming back up, however, I then want to target the point of control. I then want to target value area high and also within this minus development area. Then I want to go ahead and target all the way up here towards that untested point of control at 6324.25. Now, I do got a very important stat I want to share with you guys here in a few moments. But first, let's take a look at the economic calendar out here for next week. Monday, no economic news to contend with. We come over and we look at Tuesday, no major economic news. We look at Wednesday, we're going to get the FOMC meeting minutes. Are we going to find that some of the FOMC members are actually starting to call for a rate cut a lot sooner? Then on Thursday, we get the weekly unemployment claims. And on Friday, no news. So really Wednesday and Thursday is the only major news catalyst that we have out here. Now, if we come over and look at this stat real quick, and this is going to be the S&P performance after a 25% advance in less than a quarter. And we only have 5 other times this has happened in the past. However, if you look at this, on the 5th occurrence of this, 1 week later, we were down 3.8%. Every other time, 1 week later, we were still up. 4 weeks later, undefeated. 2 months later, undefeated. 4 months, 6 months, 8 months, 10 months, and even 12 months, all undefeated. So is the fact that the market is extremely strong a clear sign that the bears are going to continue to get run over? Now, I do want to let you guys know this is nothing more than a stat, and stats get busted all the time. Now, let's come over real quick and take a look at the 10-year yield. 10-year yield has been starting to pull back here just a bit, but then something very interesting has started to happen. If we come over and look at HYG versus the SPY, we saw HYG this week not making a new high as the S&P 500 made a new all-time high. However, if we come over and look at the Dow Jones versus the transportation index, we talked about this divergence we had setting up. Now we're finally seeing the transports, the chart on the bottom, starting to break out as the Dow is also trying to go ahead and make a new all-time high, join the cool kids club with the NASDAQ and the S&P 500 making new all-time highs. However, when we come over and look at this chart real quick, stocks above the 20-period moving average. If we zoom this out, we can see this week we made it right up here. And if we scroll this out, this is roughly the area where the markets starts to come under pressure. Maybe it goes a little bit higher, but again, when everything is clicking on all cylinders, watch out, some type of pullback is likely going to get underway. And that's exactly what I was trying to warn you guys about with the 38% retracement. Now, if we come over and look at the dollar index, we had that weekly zone. The dollar index has been able to push well below that area. Now, with a weaker dollar, we would expect gold to start to be on the move up higher. We see gold is still holding above this trend line that we have broken out from. Now, it's going to be imperative if gold can get above 34.11, watch for gold to make a new all-time high. We had this small ABC pattern right here that actually caused gold to start to pull back just a bit. If we really start accepting price below this area down here, we'll call it 32.96, then I want to start watching for gold to come down towards 32.34 and then maybe down here towards 31.59. Next, we jump over and take a look at crude oil. Crude oil has been smacked down quite a bit. Now we have this lower level consolidation. I think I read an article over the weekend that talked about OPEC Plus actually going to go ahead and supply more oil, which is going to be good for inflation. All right. Cheaper energy prices, good for us, the consumer. Now we come over and look at the QQQs real quick. I want to start off looking on the weekly chart. We can see the Qs almost closing at all-time highs. MACD indicator, very strong out here. Good separation of the two lines. Now, if we do go ahead and we pull on the 9-count indicator real quick, notice 2 weeks back, we did get the 9-count, and now the market has pushed up here just a bit. We come over and look at the daily chart, and now on Monday, we have the potential to get another 9-count for the QQQs. However, look at the MACD indicator real quick. Look at as we're making new all-time highs, the MACD indicator is failing to make new highs. And if we go ahead and we pull up the RSI real quick, RSI also is over the 70% level. And when we start turning back down below that level, watch out, we're likely going to see some type of pullback in this market. Now, as we come over and look at the 4-hour chart real quick, we can clearly see that MACD divergence. When we see MACD is extremely lower than where we were when we had this spacing out period after a push on the way up. You can see we have several gaps on the way up as well. On the 30-minute chart on Thursday, we kind of had a P as in Paul shaped profile, and we're going to see how the market actually opens up. On Thursday, we had that massive gap up. Don't be surprised if we come back and start filling that gap. Now, something I forgot to mention on the SPY, and we can look at this on the Qs as well. On the daily chart, we want to grab our Fibonacci retracement tool, measure the swing low right up here to the swing high. Watch the 38% retracement. Do we come back down below that level? And really, if we can clear below this volume area right here at about 549.50, it's going to be green lights. We're going down to the 30% retracement, 38% retracement, and potentially all the way down towards the 50% Fibonacci retracement level. And if we breach that, then we'll be looking at the 61.8 and maybe even coming all the way down here, filling the gap, coming down towards that high volume area at about 531.31. Now, if we come over and look at the NASDAQ futures real quick on the 4-hour chart with the weekly volume profile levels, notice similar to the S&P 500, we have two consecutive untested point of controls. The first one was from the prior week at 22,420 and a quarter. Then we have the one from this past week, 22,824.00. Now, unlike the S&P 500, we're actually closing back within value. So 22,948 will be value area high. The point of control, 22,824.00. Value area low is going to be 22,713.00. As long as we can stay below value area high, I want to turn my attentions for a test of that point of control. If we breach that, I want to watch value area low. If we breach below that, then I'm looking for the market to come back down and take out these wicks at this double bottom. Anything below that, my attention is then being turned right down towards 22,420 and a quarter. Now, like we did with the S&P 500, I also want to grab my Fibonacci retracement tool, measure from the swing low on the 22nd all the way up here to the all-time high in the market. Now, if you notice, right between the 38 and 50% retracement is where that point of control is going to come into play. So if you're looking for another target after we break that double bottom pattern, maybe that 38% retracement would be a nice logical target to use on the way down. Now, if we come over and look at the 4-hour chart and we turn on the FVG indicator within NinjaTrader, now one of the areas I want to watch is going to be the top of this area at about 22,822 down here to about 22,729. Now, the way I'm using the FVG indicator, similar to what we talk about all the time on the live stream with the minus development areas in the profile. And you'll find it quite often, the FVG areas will also align with minus development areas within the volume profile. Next, we jump over and take a look at the daily profiles real quick. We can see that we have an untested point of control below us at 22,824.00. Now, unlike the S&P 500, we are actually able to take out that point of control from Thursday on Thursday's night session. Then the market came down and we had a lower level consolidation. Is this going to be treated as a bear flag pattern? And we are likely going to go substantially lower from here. If we start breaking below these lows, which is right near value area low at 22,889.75, then I do want to turn my attentions down towards that point of control. If we start breaching that point of control, then from that point on, I want to go ahead and focus on the targets on the 4-hour chart with the weekly volume profile levels. However, let's say, for instance, we actually come down below value area low and we start coming back up above it. Then I want to turn my attentions right back towards the point of control at 22,929.75. Then all the way up here towards value area high at 22,972. Anything above that price point, we can then look to target this volume distribution area at about 2303. Then above that, then we'd be looking at making another new all-time highs. Now, if you look on here on Thursday, we had that P as in Paul shaped profile. Now, with that, what do we expect after we broke a specific level? We had a very, very specific target. Now, if you want to learn how to trade that P shaped profile, then make sure to watch this next video right here.